If you have been following the news, you probably already know that Bitcoin has just passed the 40,000 US dollars mark, even though some months ago it was only around the previous mark of $20,000. And the truth is that not only Bitcoin but other cryptocurrencies such as Ethereum are reaching all-time highs, and with the strong moves that I don't know precisely if they are sustainable or not. But what I want to share with you today is some facts, some risk that you probably don't know, and if you're planning to buy some Bitcoin just for a case, I think that you should know about this in order to see the both sides of the coin. As you can see in the chart of Bitcoin, you can easily observe the significant movement that this has been making, not only Bitcoin but all other cryptocurrencies, okay? And they have in fact been making some significant moves in the previous months, okay? For example, if you have invested only in the beginning of 2021, around here, let's say, you would already made around 30% in 1 week, okay, which means that it is facing a lot of volatility. But as I've been telling you, I'm quite conservative about Bitcoin. I think that people are still too excited with the stock market and so on. But now what I'm planning to do is to present you some additional risks from reliable sources, I guess, so that I'm trying to not be influenced by my biases, okay? Of course, each one of you might have your own vision on things and how Bitcoin will be incorporated into society in the future, but what I want to tell you is basically the risks that are associated so that you can make an informed decision, okay? As a disclaimer, I'm not invested in Bitcoin or any cryptocurrency because well, I think that the risks I'm about to tell you are significant and still largely unsolved, but I do believe in the benefits associated with the blockchain technology that is behind it, okay? So starting with one, I think it is a great source of information that most people in the cryptocurrencies world use, that is CoinMarketCap, okay? This is a website with a lot of information, and I think that it also allows you to buy cryptocurrencies and so on, allows you to see a lot of statistics, okay? But what I want to show you here is about Bitcoin. You could see other cryptocurrencies, okay? It shows you the price, the current market cap, that is in basically like a stock, okay? The market cap of a company is the current market price multiplied by the number of shares outstanding. Here the idea is the same. We have some I don't know, I think it's 18 million around that coins in the market, and multiply it by the current price, we reach the market cap, okay? And you can see also the volume of transactions, circulating supply. Oh, there it is, the current number of Bitcoin. If you already have some knowledge around this topic, you know that the supply is capped at 21 million, which means that around 89% of Bitcoins are already circulating, were already mined. But what I want to tell you, the first risk that I want to warn you is about the concentration of Bitcoin, okay? Just like any other instrument, the more concentration that is, the lower the liquidity and the easier it is to manipulate such asset, okay? And if you can see here, there we have several information about the balance, that is number of coins in each address, okay? Number of addresses, the percentage regarding the total, and the coins that all of these addresses have, okay? This is also the percentage of coins in total. And as you can see, I made some quick analysis, and I just copied these two tables, okay, we have percentage of addresses and also the coins that, as you can see, is equal, I think, to the value we had previous. Okay, it's close because probably the information has already updated a bit, but the idea is to see the concentration. And if we go to the largest balances, we can see that in fact a lot of a significant percentage of total coins is sold by a significant low percentage of addresses. Okay, address is basically your wallet or the place where you receive your account, where you receive your bitcoins. Okay, and for example, as you can see here, only 0.45% of the people who hold bitcoin gets around 85.5% of the coins. Okay, and if we increase the range a little bit, we can see that only around 2.5% of the addresses old are responsible for almost 95% of the coins. Okay, so this is an incredibly high concentration of in the Bitcoin world, and as you can see, if you do a quick research in the news, for example, there is this Twitter page, I think Bitcoin Whales, that that alerts you for the major movements being made in the Bitcoin network. Okay, and as you can see, there are significant movements of people selling a part of Bitcoin that it can in fact it is a risk variable, just I told you, because the higher concentration means that it is more easily manipulated. Okay, and what can happen in the worst case scenario, in my perspective, is that if Bitcoin continues increasing and if it even reaches $100,000 and all of these major players start selling their entire portfolio, because well, it is pretty attractive, the idea of making our transactions in the real economy with Bitcoin. But if people see their wallet that is now worth in millions or even billions of dollars, they will certainly sell it because they don't care about the transactions and being fair with the people and taking out the corruption of central banks and so on. Well, in the end, what matters is money, and people are gravy. And so the first risk that I want to warn you about is this high concentration that is in the crypto world. I'm watching the Bitcoin here, but other cryptocurrencies might face the same behavior. Okay, so this is the first risk that I wanted to warn you. Now, this is not a specific risk, okay, but this is more a concern I had when I watch the price going up, because it is important to see, well, if in fact the Bitcoin is being more used in the real economy. Okay, what gives value to Bitcoin is not only the capacity, its scarcity, okay, as we have seen in the previous video on how to value Bitcoin, but also if it is being traded, because that is precisely what we want in order to assess the eventual success and the incorporation of Bitcoin technology into the economy. And as we can see here, there was a major increase in the number of transactions. Since 2012, it would have been, in fact, a great time to invest in this type of technologies, but I was still too young and had no money to invest. But even 10 euros would be great to have invested around this time. Nevertheless, what I want to focus is that, in fact, as people recognize this new technology and this way of making payments, the number of payments has escalated quite quickly at around 2018, when the burst, for me it was a bubble and a burst, and then the number of transactions decreased sharply. Okay, ever since second half of 2018, the number of transactions seems to have escalated once again, which is a good sign. Okay, it still isn't in the 400 thousand transactions per day, but it is in fact going closer, and it shows that even though the price of Bitcoin is increasing, the number of transactions seems to be quite consolidating, and seems to be the same. So I don't see any signs that this technology is in fact being incorporated, or that there were major advances in incorporating this technology, because, well, I think that there is a sort of consolidation around this value, and only when we see really high value and high increase in the transactions, that only that then we will have an idea that the Bitcoin is being more used and in the everyday life obligations. Okay, so going now to what I would call my second risk variable, and it is associated with the centralization of Bitcoin, but not Bitcoin, because the technology itself, as you probably already know, is decentralized. That is one of the advantages, one of the strengths of this type of technology. Okay, no one controls it, at least in theory, but when in order to mine, when we take a look at the mining, or the entities that are responsible for the mining of these bitcoins, okay, we can see that in fact most of them are located in the Chinese market, okay, because there they benefit from lower hardware and electricity costs, as you probably already know, as more bitcoins are mined, and as time goes by, the difficulty to mine additional Bitcoin increases, okay, and this demands more resources, and if the costs aren't are significant high, and that make and the miners don't have any profit mining Bitcoins, well, the as the basic economic theory suggests, well, if there is no profit, they will leave basically the market, okay. So miners in particular must always be seeking for better conditions, and in fact this is the second risk variable, because by being concentrated in China, and the governments the Chinese government is even don't support to this activity as much as other countries, okay, and this is a risk, because this might be appropriated the assets from miners, and well, if we focus so much in the decentralization of Bitcoin, having decentralization is certainly a weak point in the whole structure of Bitcoin, okay. And as you can see, this is another risk variable that you might have to consider. This is associated with my third and last risk variable that I want to tell you, and that I've already raised in the previous videos, that is associated with the fact that central banks are already developing their own cryptocurrencies. It's not exactly a cryptocurrency, okay, it's more, because it isn't decentralized, it's only the incorporation of blockchain technology in order to make the fiat currency more more efficient, let's say. For those of you who don't know, the fiat currency is basically a currency that is backed up not by a commodity such as gold or silver, but only by the government that issued it, okay. So it works basically on trust, and several governments are already making some efforts, some significant efforts, in order to develop their own technology, in order to incorporate the benefits of the blockchain technology, that, as you probably already know, allow for more efficient transactions, and for more secure even, and at lower costs and high speeds, okay. So what they are trying to do is, in order to make their currencies and incorporate the blockchain technology into there. So in the end, I think that the value will come from the currency that will be used in the everyday transaction, and if Bitcoin isn't incorporated in due time into the real economy, let's say. And in the end, what matters in my perspective is the currency's capacity to be used in the daily lives. Okay, so if people cannot make a loan in Bitcoin, for example, imagine that you would make a loan in Bitcoin, and then you would have to pay after 1 year 1,000 Bitcoin, and the price increases or doubles or triples, then your debt will also increase by the same factor. This isn't, in my perspective at least, this cannot be a currency, because, well, people say that it has the capacity to preserve value. In my perspective, it doesn't, and this type of volatility cannot be associated with a currency that we use in our normal lives. Okay, I don't know if Bitcoin, if this volatility will end when all of the Bitcoins are mined, but this is only expected to happen like 100 years from now or even more. So I think there's still a long path ahead, and there are certainly other alternatives and risk variables that might compromise the path of Bitcoin in the future. So as you can see, even though the Bitcoin and cryptocurrencies might be an exciting world, and even if you don't agree with the policies being made by governments, such as stimulus policies that are based in printing money and only favor the wealthy ones, nevertheless, I think that Bitcoin has also several disadvantages. That's why I'm still not invested in it. I know that some of you might be making some profits with it, but that's okay. It just doesn't fit my risk profile, and what I hope is that you also consider these risks into your decision, and that you are able to exit at an adequate time, even if in any case this might be only a bubble. I don't know. Leave your comments down below. What do you think about it? What if you knew about these risks that I just told you? And I will see you in the next video.